Good afternoon, everyone. Welcome to today's webinar on the upcoming legislation on umbrellas, hosted by Giant Group and kindly supported by FCSA. We've obviously got quite a few people registered, and we've got numbers flying into the session now as we speak. So I'm just going to give it a few seconds to make sure everyone can join. In the meantime, whilst we're waiting, please do take some time to familiarize yourself with the functionality. If you've not used Teams before in one of our webinars, you've got two functions, chat and the Q&A. If I could ask, if you've got a question, please use the Q&A button to submit that. I'll make sure that we leave time at the end of the session for questions to be answered. So please do pop them into the Q&A as we go. And don't be a stranger. If you want to say hello, please do use the chat function to do that. Let us know where you're signing in from and how your day's looking. And we'll get started in a couple more seconds once the numbers have started to slow down on joining. Okay, it looks like starting to plateau off. So I think now's a good time to get going. So good afternoon, everybody. Welcome to today's webinar on the hot topic of the fortnight, really, which is umbrella legislation. And that's brought to you today by the FCSA along with Giant Group. So for those that don't know me, I'm Dan Haslam. I'm Chief Business Development Officer here at Giant. I'm going to be the host today, but fortunately, I've got an easier job than normal in the sense that our Chris Bryce is going to drive the presentation from FCSA's perspective and go through the legislation, looking at it from the FCSA's point of view and giving us a steer on how things have developed over the last few weeks and the outcome that we had last Monday. I'm glad to say I'm also joined by Selina Rabbani, who's Chief Operating Officer here at Giant. Selina, would you like to introduce yourself to the audience?
Yep, sure. Hi, everyone. So as Dan said, I'm Selina Rabbani, the Group Chief Operating Officer. I've been in the industry for those who may know, for well over 20 years. So I specialise in driving not just the operational excellence, but making sure that we are 110% aligned with all of the compliance and legislation. So I'm excited to be part of the panel and the webinar. Hoping to deliver some insights into our views and FCSA's views on the draft legislation, and looking forward to the questions.
Yeah, great. So a nice reminder there just to everyone, if you've got questions for today as we go through the session, please use the Q&A function on your menu bar at the top, and we'll make sure we get round to those. But the format today is going to be, Chris is going to run us through shortly a presentation going through what's changed, what we think the impacts could be on the market and the story so far, and then probably looking to leave 10 to 15 minutes at the end of the session for both myself, Selina and Chris to take any questions that you guys have. So without further ado, Chris, I'll hand over to you and I'll bring the slides up for you.
Thanks, Dan, and good afternoon, everybody. Pleasure to be here. As Dan says, we're going to run through a few slides. It's not quite death by PowerPoint, but it's getting there. And what we'll be doing is just outlining a bit of the background to the legislation that was given to us last Monday, and how we think it's going to affect the market. So I think without further ado, we can just launch straight in. As Dan says, please use the Q&A to ask any questions you have. Just a quick intro about FCSA. We are the leading experts in compliance in the umbrella market. Probably, it's a bit braggy here, but we're the gold standard for accreditation. We're the only not-for-profit. And it's important to note that assessments, and therefore accreditation, is carried out by best-in-class professional service companies, companies like EY, BDO, and you'll find that we're the only supplier in the market that actually has truly independent accreditation. And Giant Group, of course, as you all know, is FCSA accredited for umbrella, PEO, and CIS, although what we're speaking today about really only affects the umbrella market. and will affect, to a certain extent, the PEO market. And Giant Group are already live on Diligence Hub, which we'll speak about a bit later. Thanks, Dan. So a bit of background. As you probably all know, in 2022, there was a call for evidence on regulating the market. That was run by, it was called BEIS back then, but it's the Department of Business and Trade today. And we contributed, as many of you will have done, to that call for evidence. And then a formal consultation on regulating the market was issued in 2024 by Her Majesty's Treasury. So that meant at that point and forever after, this was all about the money and very little to do with the actual processes and procedures around the umbrella market. That will come later as a result of the Employment Rights Bill. In the October budget, the Chancellor announced that she had plumped for option 3, which was to move the responsibility for, and therefore the liability, PAYE to agencies, to recruitment businesses, employment businesses. And that was really what we described internally as the nuclear option, because it made very, very little sense. So REC, APSCO, Team, and some of the software providers, umbrellas, agencies, other interested parties, we got them all together as the industry working group. And we also engaged somebody called Rebecca Seeley-Harris, who may be known to you, who is a well-respected tax policy expert who's worked with government in the past. And it was clear to us that we needed to work on alternatives to the option 3, because option 3 just doesn't work. And in 2025, earlier this year, FCSA produced a fairly comprehensive report about the problems of option 3. You're welcome to download that report from our website. It's about 70 or 80 pages long. It will send you to sleep. We've had dozens of meetings with MPs, peers, HMRC and Treasury, and Rebecca, with our support, eventually proposed the joint and several liability option as a solution. And in June, government said, yeah, okay, we quite like that. And then finally, on the 21st of July, the draft Finance Bill 2025 was handed down, and joint and several liability is now government's policy. It's a big win for Rebecca, for FCSA, and the industry as a whole. I think that the effects, especially on workers, of option 3 would have been absolutely horrendous. It would have cost millions in terms of repapering all your candidates, bringing things in-house, or seeking different relationships with your umbrellas, different contracts, etc. So option 3 was just, it would have been a hand grenade. So we're glad that we avoided that. If we can move on, Dan, please. So what are the tax regulations? Well, it's a new chapter, chapter 11 of ITIPA, which sets out the tax liability rules for the industry, and it's effective from 6 April 2026. We have been asked, is there going to be a delay? No, there's not. And the reason for that is FCSA did originally ask for a delay of a couple of years because option 3 was so difficult to implement. However, we're quite happy that 6 April 2026 is a relatively good target for the legislation in its current form. And it states that joint and several liability is the way forward for relevant parties in supply chain. And we'll come to exactly what a relevant party means in a few minutes. They'll share the liability for PAYE payments. It can apply to the whole amount due, but it will definitely include any shortfalls or underpayments. And this is crucial, regardless of the reason for it. So even if it's a genuine error on the part of an otherwise fully compliant umbrella, that liability can land on the desk of the relevant party. And as I say, we'll go into what a relevant party is in a few seconds. Also important to point out, there are no statutory excuses. The legislation automatically applies, and any attempt at smoke screens will be ignored. We'll kind of explain what a smokescreen could be. And the offshore entities in the supply chain will also be ignored. So there is no point in doing business with an offshore entity thinking that that is going to be a way out of these regulations. It isn't. Next slide, please. I feel like I'm on a COVID briefing here now. So there's a broad definition of umbrella companies, very broad definition. It will include employment businesses and intermediaries who directly engage workers under a contract of service, an employment contract. So even though you think you're not an umbrella, if you're engaging workers on a contract, an employment contract, you actually, in terms of this law, are an umbrella. But recruiters are not being the deemed employer, and this is key. This is very, very crucial. The ERN in use will still be the umbrellas, and all liability and responsibility for employment law, employment rights will still be the umbrellas. That means that you as an agency don't have to take on all the risk of becoming an employer. You can leave that quite safely, as you do today, in the umbrella's hands. So, for example, and I know that we've been through this, Dan, if there is a grievance raised by a worker, you don't have to deal with it. Giant will deal with it for you, and because it's Giant's responsibility, which means it's more or less business as usual, with no employment contract changes required and no changes required to documents such as KIDs. But please make sure you get them right. Our recommendation very strongly is always to use assignment rate rather than any other term. Assignment rate is clear that that is the top line rate that the worker is going to be paid. And it's very important you use assignment rate and not PAYE or wage or salary or anything like that, because that could get both the umbrella and yourselves into a little bit of a struggle with employment tribunals. Next slide, please, Dan. So, relevant party, what does that actually mean? So, relevant party, again, has been defined fairly loosely, well, in some ways fairly loosely, but with the clear intent that the topmost agency in the chain, the one with the contract with the end client, appears to be the entity that becomes liable, even if there's multiple agencies involved. So it doesn't matter how long the chain is, the supply chain is, the topmost agency, employment business in the chain, will be the relevant party, will be liable for any underpayment of PAYE. If there's no agency involved, i.e. there's a relationship directly between an umbrella and an end client, then the end client will be held liable. If there's an MSP or agency connected to the umbrella, the law looks through that relationship and just says, no, sorry, you're acting as if you're an umbrella, and the end client will still be liable. I'll get a bit of a diagram that clarifies this in the next couple of slides. And connected means common directors or shareholders. And if the topmost agency isn't UK-based, the end client potentially is still liable, although it's likely to go to the agency nearest to the end client. And just to avoid any doubt, master service providers are included, even if they're not in the payment chain, even if all they're doing is arranging the paperwork, letting contracts, etc. The MSPs are included in this, so they could potentially be the liable party. Next slide, please, Dan. And there's another new phrase, purported umbrella, which is hugely broad and is deliberately designed to catch many umbrellas, fraudulent arrangements, unlawful gross pay models. And what we've been saying at FCSA is if it looks like a duck, walks like a duck, and quacks like a duck, it's probably a duck. So any organization that is carrying out the function, and the key here is where a reasonable person would look at that and say, that kind of looks like an umbrella company arrangement, then as far as this law is concerned, it will be an umbrella company arrangement. Next slide, please. There'll be more regulation coming down to amend the Social Security Contributions and Benefits Act. It's a bit of a mouthful. which will allow Treasury to make regulations imposing joint and several liability for national insurance contributions. So it will be a mirror of this legislation and act exactly the same as it does for PAYE income taxes. There will be more amendments to prevent the fraudulent documents condition, i.e. where a non-compliant umbrella, a payroll pirate, provides you with fraudulent documents. Unfortunately, that is not going to be an excuse. That doesn't let you off the hook. So, and importantly, HMRC will be able to issue a Regulation 80 determination to a joint and severally liable party. That means it's an automatic process. They don't have to go to a first-tier tribunal or to a court. They can just figure out how much they think they're owed and issue a notice requiring you to pay it. The genuinely self-employed and those who are otherwise deemed to be employees for tax purposes already will still be covered under Chapters 7 through 10 of ITIPA. So they're excluded from the new Chapter 11, with only those existing chapters taking precedence. So there's no change from usual there. That's exactly as it is today. So any workers that are perhaps, working under the off-payroll working rules or the agency worker tax rules will still be treated the same from April 6 next year as they are today. Next slide, please, Dan. So where will the liability land? This comes back to the relevant party, and I've tried to describe it here. The ones in the blobs in red or outlined in red will be the liable party. If a non-compliant umbrella in the vanilla supply chain provides services to an agency, which in turn provides those workers to an end client, the topmost agency in the chain will be the liable party, illustrated in vanilla. And then we can have a look at a slightly more complex supply chain where there are multiple agencies or there's an MSP at the top of the supply chain. They will be the responsible parties. And a direct engagement with a non-compliant umbrella, the end client would be responsible. Next slide, please. And this is the concept of connected umbrellas and offshore entities. So if we take a connected non-compliant umbrella, and that frankly is likely to be an agency which owns its own umbrella company. And there's one or two of those in the market already. I can probably guess that some of you on this call will have already had dealings with one or two of these, where they have perhaps involved in a framework. They have not only an employment business, but their own umbrella that they steer your candidates to. That's a connected umbrella, and the agency will still be liable. The end client will become liable because HMRC regard the agency and the connected umbrella as the same entity, and therefore the end client will have responsibility. And if there's any offshore entity in the chain, then it's likely to be that the topmost agency, the agency nearest to the end client, will be held liable for any shortfall. So you have two scenarios there, one where the non-compliant umbrella is dealing through an offshore entity to a perfectly legitimate agency, who in turn supplies the end client. The agency nearest the end client, to the right of that, will be held liable. And then the second scenario is where there's an offshore entity between the agency and the end client. It's likely to be the agency nearest to the top of the chain, nearest to the end client, that's held liable. So interposing an offshore entity does not exclude you from these rules. Sounds a bit complicated, but if you follow the process flow there, it's fairly straightforward. Next slide, please. So how do we de-risk the regulations? Well, you're off to a fantastic start. You already partner with Giant, which is an FCSA accredited umbrella. A couple of other steps that you could take is make sure that your current preferred supplier list is an assured provider list. We suggest of only FCSA accredited providers, but we would say that, wouldn't we? And we can help you do that if you become an FCSA recruiter partner. And you can work with your provider to ensure trust and mitigate risk. You can keep ahead of the compliance curve with FCSA's Diligence Hub, which enables you to get up-to-date and comprehensive due diligence information around all the contractual processes and behavioural processes of your umbrella. And you can also verify payroll accuracy and, crucially, HMRC remittances by using VeriPay. These are very, very low-cost services which do all the heavy lifting for you. And we think that due diligence and proactive due diligence is going to be essential, and we can help recruiters build on their existing processes. So that's the sales spiel over. Don't fall for unrealistic incentives. They are not affordable for a compliant umbrella. So if you get an umbrella coming along and saying, we'll give you 500 or 1,000 quid per candidate, they just can't afford that if they're acting in a compliant fashion. Don't fall for it. Don't fall for outside the regulation schemes. We've already seen one. Believe it or not, we got all the paperwork for a newly introduced scheme. The legislation dropped on Monday at 5:15 in the evening. On Wednesday, about midday, we saw fairly comprehensive documentation, complete with King's Counsel opinion, etc., etc., that says it's outside the regs. Looked at that and laughed. They just will not work. And HMRC's purported umbrella clause is absolutely designed to catch those schemes. And payroll pirates are going to be a lot easier to spot, both by us, and we do report them, and by HMRC. And they should be a lot easier for agencies to spot as well. So basically, anybody offering a scheme that seems to suggest that it's outside these regulations or is offering incentives which are, way above the norm, then you need to be immediately suspicious and walk away. Next slide, please, Dan. So a few FAQs. Will MSPs be on the hook? Yes, they will, even if they're not in the payment chain. Covered that a bit earlier. When will this hit Parliament? We still have a window of opportunity to suggest tweaks to the legislation over the summer. It will hit Parliament probably. Parliament doesn't reconvene till the 2nd of September. They get a nice long summer holiday. They can go golfing with Donald Trump. The finance bill normally goes through in October, November. So we have a little bit of time to further input some tweaks and clarification, get some clarifications on the regulations. The other question I've been asked a lot is, what about the liability for VAT? That's not included in these regulations simply because it's already covered. We have case law, CITEL and ICL, and joint and several liability applies to unpaid VAT on VAT Notice 726, and that can be applied relatively widely. There's some argument about supply of goods as opposed to supply of services, but if they've got one in VAT Notice 726, they can easily have another one. So VAT is not going to be included in this legislation because the regulations already exist. So anybody viewing this as a new loophole that they can take advantage of is going to be in for a pretty nasty surprise. Next slide, please. We've been asked about the liability for apprenticeship levy because it isn't mentioned, but we expect that that will be addressed prior to November, and the same joint and several liability will apply. There is some indication that government's view is that the apprenticeship levy is part of PAYE. I'm not entirely sure that I agree with that, but we're pretty sure that they'll clear that up in the time between now and October, November, when it actually goes through Parliament. We've seen some approaches about flat rate VAT schemes. Are these legit? Hardly ever. We see these schemes a lot. They often, as is often the case in these dodgy schemes, the payroll pirates will offer you great rebates, apply the barge port rule. And I suppose one question, which quite a number of people have asked me, is, has government just established us as us being the agency world and the compliant umbrella world, a self-policing tax regime? And the answer is yes, that's exactly what they've done, and that was absolutely their intention. Government themselves, despite the fact that they're taking on 5,000 more inspectors of tax, just don't have the resource to cover our industry fully. So they have been quite clever in what they've done. Next slide, please, Dan. Do we expect to see any behavioural changes? Yes, we do. Yeah, we think we'll see a combination of all or some of these. We suspect that end clients and master service providers or lead agencies will start requiring the use of FCSA accredited providers. There will be a massive uplift in proactive and robust due diligence. I've already mentioned VeriPay and Diligence Hub, which FCSA can help you set up. We think that end clients who are direct to umbrella, and this is good news for the agency sector, any end clients who are direct to umbrella using in-house recruitment will start to use agencies. And the simple reason for that is, let's be honest about this, they can de-risk their position by inserting an agency as the circuit breaker, which is good news for you. It should mean that you pick up more business. And end clients will require that agency workers are shifted to umbrellas, especially those on contracts of employment. And the simple reason for that, again, it introduces that short circuit that end clients will be looking for. And we think there will be a requirement of lead agencies requiring due diligence, provable and demonstrable due diligence of the entire supply chain. I think that's probably self-evident. And we do think that indemnity policies will be, if they're not already in place, will be developed for insurance-backed for the entire supply chain. So I suspect that that's something we'll see more of in the coming weeks, if not months. And FCSA are indeed working on exactly that. So, and I think more or less the last slide, what did FCSA think of the regulations? Broadly speaking, we think they're pretty good. JSL is way better than the original option 3, which would have caused us all huge problems, but especially the workers. And bizarrely, it would have made HMRC's job a lot more difficult. We think the bill as drafted will help close down the payroll pirates and help close the tax gap. The outcome for your candidates is definitely better than option 3. The outcome for agencies is much better than option 3. And the supply chain will at last be able to compete on a level playing field, simply because I think a lot of the payroll pirates will be either shut down entirely or just be so much easier to spot. It will be self-evident when somebody comes knocking on your door offering incentives that are unrealistic, and the dreaded words, Chapter 11 doesn't apply to this arrangement. HMRC have catered for that, and they're they set the definition so broadly that almost every arrangement will be covered by Chapter 11. So I'm going to hand back to Dan now. Please feel free to ask any questions in the Q&A or in the chat even. And I've got the questions open here. Or those of you who can, I'm not sure most people are able to, can stick up their hand and voice their question. Dan?
Yeah, well, I think thanks, Chris. I think we'll probably look at running the Q&A through the Q&A sections. I think everyone's on mute, so they'll struggle to orate the questions. I think just adding a little bit of comment from my perspective, I think I agree, certainly from Giant's perspective, we agree with what you've said there around this being welcome. I think fair play to the government for actually tackling this. It's been on the agenda for some time, and think we're all relatively pleased with the outcome on the basis that they've listened to the good work that you guys have done at the FCSA to sort of feed those messages in as to how disruptive unadulterated option 3 could have been. So I think we're pleased on that. I do think there's probably a bit of a word of caution there on enforcement activity, in the sense that good that HMRC have got further capacity, but how quickly the market will react to these changes probably will hinge in certain sectors on how quick that enforcement activity comes to bear. So thinking about some of those blue collar areas in particular, you know, the challenge back has always been, well, if we don't engage this dodgy umbrella company, someone else will, and we'll lose business. And I think that level playing field's only going to be achieved if there's some visible enforcement activity. So I'm sure we'll all welcome that when we see it. Selina, before we dip into questions, I don't know if you've got any comments you wanted to add or talk about anything in particular that Giant are doing on top of what Chris has mentioned here around the legislation.
Yeah, thanks, Chris and Dan. So I think it's probably a couple of takeaways that everyone on the webinar can take away is there obviously is a lot of talk and commentary in the market about payslip checking software, and obviously FCSA, you've got VeryPay. One of the things that I have been talking about to some of our partners is being on the lookout for any untaxed payments made to workers by an umbrella company. So when looking at payslips, really look for any untaxed payments, which generally tend to be rechargeable or billable expenses. That is going to be a big risk area for agencies, because if the worker should not have received those expenses as untaxed, that PAYE liability will be sitting with agencies. So be on the lookout for that. Obviously, there will be compliant expenses. An umbrella company should have a really robust process in place to make sure that, you know, they've got the receipts, they've checked that they're allowable expenses, and they're allowed to be paid as non-taxable, and they're in line with HMRC guidelines. And I know with FCSA, those, as part of our process of being assessed, those kind of checks are carried out, and we have sample audits as well. So one is any non-tax payments. The other thing is, Chris, you touched upon it, is about terminology. And Chris, you talked about using the term assignment rate. So that's really, really important. We've seen so many successful tribunals and cases where it's just the wrong terminology is being used when communicating with a worker. So looking at your contract documentation, both with umbrella companies and whether you've got, you know, workers, PAYE workers, just make sure you're using the right terminology, not just in your contracts, but also in your adverts as well. So we've seen some cases where an advert has said your rate will be, and a worker has said, well, look, the job advert said my rate would be, and it's not. That's the umbrella assignment rate. And I suppose the third takeaway that probably we'd want to cover is how important compliance is and working with compliant providers, because working with non-compliant providers, the impact it has on your company, your agency's valuation, can be huge. So just always have that in the back of your mind. I know it's sometimes, especially Dan mentioned in those blue collar sectors, it sometimes can be difficult, especially where the worker is demanding for you to work with a non-compliant umbrella. It's just the impact that could have on your company valuation. Thanks, Dan.
Yeah, I think, Selina, that the point you make about untaxed expenses or untaxed payments to workers is a very valid one. And that's something that we're very conscious of. As you say, it's in our codes of conduct, and we test for that on a regular basis. I think one thing is probably worth saying that any payslip checking tool that doesn't also draw attention to vast amounts of untaxed expenses is probably not doing its job right. So.
Good. Okay, thanks both for your comments there. So if you've not already entered a question, please do put them in the Q&A section, and then the panel will be able to go through those, and we'll move on to them now. So First question that we had in was from Stephen. Will this put increased pressure on IR35 determinations? If HMRC successfully appeal an IR35 determination, can they use this legislation to recover PAYE liability up the chain?
Quick answer to that is no. The existing tools in their armory, which basically is from memory, Chapter 10 of payroll working rules, will apply. So this legislation specifically excludes anything or any circumstance which is currently covered by Chapters 7 through 10.
Yeah. And I think also I think slightly linked into that, there's obviously been some comment out there that there could be an increase in PSE utilisation by contractors as a result of this legislation. I think certainly there'll be an element of that where it's possible, and obviously the best way to draft that is on a true statement of work arrangement to both address concerns on IR35 and then obviously take an engagement outside the scope of this particular legislation. But I think it's going to be interesting if a business picks hopping into IR35 legislation as an option out of the risk that we see under this. It's kind of like pick your poison. HMRC are already enforcing significantly the IR35 rules, and we're sure to see activity enforcing this as well. So I think it's clear if a worker is inside IR35, the best approach is to payroll them. And if you're using an outsourced provider and to do so, then obviously use an FCSA accredited one and a compliant one to try and pick a battle and think you've dodged a bullet here by moving into PSE probably opens yourself up to more risk. Second question here from Gordon. If a gig worker uses an umbrella company to do their gig work, who would be liable? The website / software provider that provides the work or the end client? Selena or Chris, you got any comment on that?
That's workers by definition are workers currently. So this legislation only really applies to employees, although there is scope for HMRC to say, actually, and this is the walk like a duck scenario, actually you kind of look like you are an employee of an umbrella company, and that company is behaving like it's an umbrella company. So we're kind of going to go for you. In that situation, the gig worker, and it depends very much on previous rulings in the Supreme Court. So, for example, Uber, there are workers, and I think Deliveroo might be part-time employees. I can't remember which way it went. Then it would be Uber or Deliveroo who are the end client. And if there is an umbrella financing or payrolling rather in that chain without an agency, then it would move to the end client. If there's an agency in the chain, it will definitely be the agency.
Yeah. So I think I agree with that. I think I'd also add that I think the question's also sort of relating to sort of platform style workers. So there's a whole conversation to be had as to whether or not a platform is also viewed as a recruitment agency or not. And I know from speaking to lawyers on this, their view is very much if the activity of the platform is engaging a worker to deliver an outcome or a role on the platform, that in reality often looks like a recruitment type activity. So I think anyone who's sort of procuring workers through platforms should almost take the view that is absolutely a recruitment activity, and so these rules would need to apply and they should act accordingly. Okay, questions coming in now thick and fast. So on to the next one. From Sarah. Hi, Sarah. What should we as an organisation be asking for from FCSA umbrellas, i.e. in terms of documentation, etc.? Will the auditing process carried out by FCSA change in response to the legislation? So one for you, Chris.
So in terms of the auditing process, no, it won't in and of itself change, because we've already been doing these checks for a number of years. So in addition to the financial side, the payslip side, if you like, We do a huge number of other checks, which are actually just as important, although the financial ones are grabbing all the headlines right now. We check that our members are up to date with HMRC. From later this year, we're likely to be doing that on certainly, if not monthly, then certainly quarterly basis, just to make sure that what they're reporting through RTIs is actually what they're paying. So that's probably one additional step that we'll be doing in response to legislation. But in terms of checking the accuracy of the payslips and the accuracy of RTI reporting, we already do that, and we do that not only at the audit stage, but also throughout the year. So I think there's a misconception that we just take a snapshot once a year like an MOT, but we don't. We actually plug into the onboard computer on a regular basis and reiterate some of those checks. Ultimately, where where an umbrella is on the VeriPay platform, we're able to do those checks in virtually real time, 24/7. So, which is, I think, the benefit of doing it digitally rather than any other ways.
Yeah, good. And I suppose just to add to that as well, there is also already an element within the FCSA code around financials.
Yeah.
To Chris's point on the presentation around indemnities, from Giant's perspective, we already indemnify happily on tax risk in our contracts, but of course those indemnities are only as valuable as the financial strength of the company. So I think we would also advise agencies to keep a close watch on financial health of payroll businesses also, not really just in respect of this legislation, but just as good supply chain compliance anyway. But certainly if indemnities are going to be offered, then you really must make sure that the financial standing of that organisation can back up the level of liability that they're indemnifying on. Okay, moving on to another question. I'll bring you in here, Selina. It's another question from Gordon, just in relation to the point you made on kids. So he says, should the kids say assignment rate or umbrella assignment rate?
So on the key information document, there is a template already provided by the government on their website. And on that, I think they actually, without actually looking at it, the term they use is the rate paid by you, the agency, to the umbrella company. So it's really crystal clear to the worker. This is the rate paid by agency to the umbrella company, not to you. So I would say, Gordon, just have a look at the template available. I'll try and add it into the chat if I can in a moment, but it says the rate paid to the umbrella company to make it crystal clear.
Yeah, we love different names, acronyms and labels in this market just to confuse everybody. So good if there's some consistency there with HMRC. If you can put that in the chat, that would be fantastic. Okay, next question. So question in from Charlotte. Charlotte said, I've been on other webinars where they have suggested the recruitment agency should be reviewing pay slips and calculating correct deductions have been made on a monthly basis for all workers, despite only working with FCSA accredited umbrellas, which seems a little excessive. Would that be your recommendation too? Chris?
I don't think now that's particularly excessive. I wouldn't recommend that you do it yourself. That actually takes a great deal of fairly in-depth and precise knowledge. There are clearly FCSA has VeriPay, and the fee to recruiters for using VeriPay is I hesitate to say this because it's such a cliche, but it's probably about it's less than a cup of coffee a day by a long way. So I think get us to do the work is the answer. I do think that there is likely to be some movement in the market, especially around indemnity, insurance-backed indemnities, that require that kind of level of basically satisfying yourself that you've done the best due diligence you possibly can.
Yeah, and I suppose I don't disagree with anything that you've said there, Chris. I suppose there's also an element, if you just take a step back from that, that if you felt the need to do a payslip check every single month on the providers that you're engaging, there's almost a question mark to say, hey, how confident are you in these providers that you're engaging? And that's not to say that, you know, we're glib at Giant on the basis that we've been operating for 35 years and running payrolls, but you'd hope once you'd picked good providers and done due diligence, there may not be a need to do it that frequently. However, as you've quite rightly pointed out, there's some fantastic technological solutions to that can give it you in, you know, almost real time on every single payroll. So why not take advantage of those solutions if you are concerned? Okay. Questions keep coming. So question from Jacques. Jacques has asked, is the joint several liability limited to your own workers only and not the workers paid by the umbrella for other agencies? Also, it is only the relevant parties affected, so the other parties in the contractual chain carry no risk at all. Selena, have you got a view on that question?
Sorry, I had to scroll up to read the question, so I've just managed to scroll up.
Yeah. So is it limited to your own workers? So from an agency's perspective, is joint and several liability limited to your own workers only and not workers paid by the umbrella for other agencies? Also, it is only the relevant parties affected, so other parties in the contract chain carry no risk at all, question mark.
So I would say it will be reasonable that it is limited to your own workers only, because HMRC, they're going to look at the contract chain, and if there's another party not in it, then how can you be held liable? So yes, it would be limited to your own workers only. In terms of the relevant parties affected, so the other part, correct. So I think relevant parties, we're talking about who is the relevant party, who's liable. If we go back to Chris's diagrams, the relevant party would be that the agency who's contracting directly, or the agency contracting with the hirer or closest to the hirer within the UK. So they would hold the risk.
Yeah. So just to add to that, so you're absolutely right. We asked HMRC for clarification on the first point. It will only be your own workers. I mean, that's kind of natural justice, if I can put it that way. The relevant parties, and this is key to remember, if you are, excuse me, if your agency has its own PAYE workers on a contract of employment, you are effectively acting as if you're an umbrella, as far as this regulation is concerned, and it would be your end client that becomes liable, and the end clients are likely to want to review that situation. You can put it that way. I think that also answers Kimberly's question.
Yeah, and I was just thinking in relation to Jacques' point around, you know, what's the impact on others in the supply chain? Is it just the relevant party? If you think about it logically, shoot me down, Chris, if I'm wrong here. From an MSP's perspective, they're the top agency, so they are liable along with the umbrella company. That you could argue that could almost not encourage, but those agencies further down that supply chain that have brought this umbrella company into the mix, you know, they're not necessarily going to have a direct liability here. That liability is going to transfer to the MSP. So it's almost like those naughty agencies, shall we call them, are off the hook, and it's the MSP that's carrying the can there. If you agree with that logic?
Yeah, I think I think you're right, Dan. I think it's if there are, and we do see them occasionally. If there's an agency that's prepared to behave in a non-compliant fashion, then the agencies above it in the chain, or ultimately the MSP, in your illustration, is going to be held liable for any unpaid PAYE. And clearly, you know, HMRC are still asking the umbrella for the money and making sure that they get the money from the umbrella. But ultimately, it's the topmost link in the chain, the one nearest the client, who will be held responsible and liable by HMRC. It's exactly the opposite of IR35 and off-payroll working, where it's the bottommost, i.e. it's the entity paying the limited company contractor. So it's exactly the opposite of that. I think, Jack, there's a bit where it says nobody else in the chain carries any risk at all. Well, to a certain extent, as far as HMRC is concerned, that's true. But as far as the industry and the wider market is concerned, there will be, I have no doubt, agencies and indeed payroll pirates who end up on a blacklist. Just don't deal with them, because we know that dealing with them has carries the risk of getting our good, very well behaved agency into trouble.
Yeah. So I do think for those who are MSPs and do have those longer supply chains, is to start looking at those long supply chains to see how you can just make them more transparent, or be in line with a policy that they only use compliant umbrella companies, or trying to reduce where you do have several layers there. It's really hard to see what's going on right at the end of the chain, is to look at how you can reduce it or increase the transparency.
Yeah. So one thing that FCSA is currently working on, and this is, I have to be honest, because this has to be industry wide and have, to a certain extent, the backing of government, not necessarily HMRC, but certainly the Department of Business and Trade, who will shortly become responsible for the operational side of the umbrella industry. Is basically a blockchain device to identify a worker from absolutely the top of the chain, i.e. the end client, all the way down to the umbrella. And that way you can have pretty good assurance across a whole chain. But unfortunately, that requires system changes. It requires business operating practices to change. It's some way away, but that would be the ideal solution. We have something a little bit close to that in the intermediary reporting regime. But I have to say that neither government nor, to a certain extent, FCSA have been able to marry the two, intermediary reporting with RTI. And being honest, that's because maybe the intermediary reporting isn't quite as diligent as it might be. I think we do see agencies who don't even know what intermediary reporting is, never mind actually do it.
Sporadic. It can be sporadic. I think the other point, it's a great question, Jack. You prompted a good few minutes there of debate. I think the other thing just to say on risk is, be mindful that, we're talking about actual financial liability here, but of course, reputational risk of organisations being in a spotlight, whether engaging with non-compliant providers, whether that's HMRC spotlights or indeed papers and media, also presents a significant risk for businesses as well. Let's move on, see if we can get a few more questions answered before we wrap up. So Kimberly asks, I work for a recruitment agency who only works with a PSL of compliant FCSA accredited umbrellas. So you'll be pleased to hear that one, Chris. Just wanted to check whether there's anything we still need to be wary of, any changes in general regulations that we should be made aware of. Wow, Kimberly, I think we've got enough digesting this without asking for more. But of course,
I can give you more in about a year's time. Clearly, the Employment Rights Bill is going to affect our industry quite substantially. FCSA is doing a lot of work on the ERB and suggesting amendments to it, etc. However, that is a more protracted challenge. Nothing really is going to happen much before September 2026. So there's a lot going on, and we'll probably be holding similar webinars to this in about 6 months to a year's time on how the ERB is going to affect industry. But rest assured that we're on top of that as well as on top of this. But this is April 6 next year, set in stone. You need to be, I would say, just as worried about this as you might be about anything in the ERB.
Yeah, That's a good point. And Kimberly did go on to mention that this agency also engage workers on a PAYE basis. So absolutely, the other employment-related parts of the Employment Rights Bill that Chris has flagged there will be relevant. Although we're glad to see that's been kicked along to 2027. So you can breathe for a little while, Kimberly, and just focus on this one. Okay, I've got one more question here from Karen. As the agency will be liable if the umbrella company fails to make payments to HMRC due to liquidity problems, does FCSA consider the financial stability of umbrella companies when they are auditing them? So I did reference this earlier, Chris, but perhaps you can talk specifically about what you do in the code on financial stability.
Yes, thanks, Dan. We absolutely do. We look at the liquidity levels of our members on a regular basis. It has to be said that that very much depends on a historical audit. So, what's happened since the last audit is more difficult to ascertain. Management accounts, etc., might not necessarily show the full picture that a full-blown audit does. However, I do think that it's worth noting that one of the biggest issues for liquidity in the agency world, in the umbrella world, is umbrellas who are perhaps offering over-generous credit terms or over-generous rebates. And I think that's something that agencies should be conscious of when they're doing business with umbrellas.
Good. Okay. Well, it looks like we've come to an end of the questions, so I think we can wrap up there. Chris, thank you very much for joining us today and going through the presentation. And Selena, thank you for your comments as well. Thank you to the audience for joining us. I'm sure there'll be more to come on this. Obviously, it's still draft legislation at this stage. There's still an open consultation, and both Giant and FCSA will be contributing to that in the period up to October, probably, when the legislation formalises. So if there are any further updates, we'll obviously keep you updated. But thank you for attending. Hope you found it useful, and enjoy your afternoon.
Thank you.
Thank you, everybody. Thank you.